Well, thank you. We gathered together last week as capital markets industry players and stakeholders to hosted by Rwanda Stock Exchange, of course, but under the umbrella of our association in the region, which is called the East Africa Capital Market Stock Exchanges Association, bringing together all the stock exchanges in the region, Nairobi, Kampala, Uganda, Tanzania, Rwanda, and Burundi, soon to join, and other countries. We were gathered to tackle the issues that we have at hand. So we brought together all the regulators in the region for the capital markets, the investors, institutional investors, and some retail investors, listed companies, and potential listing companies, and other stakeholders in the intermediaries to look at our issues. Basically, our markets have been around in the stock market in East Africa. You look at the Nairobi Stock Exchange, is the oldest, which is more than 64 years old. We have the Dar es Salaam Stock Exchange to follow, and then we have Uganda Securities Exchange, and the Rwanda Stock Exchange is the last born, basically. We even had a Somali Stock Exchange coming, so I think although they have not joined the regional body so far, but they are also following what we are doing in East Africa, being neighbors in north of Kenya. So, but we brought together many countries, more than 10 nationalities were in the room to tackle our issues. So our issues range from liquidity to low level of literacy, education, skills development, and not being relevant. Basically, our markets are not that relevant to our economies yet. Yet we know conventional wisdom has it, these advanced economies which have been able to advance so much in the Western world, even in Africa and in many other places, you have to have a sound and deep capital markets industry. So ours has not followed suit. You can see, the East Africa region has been growing fastest in the whole continent, if not the entire world. Rwanda being the leader in all those in East Africa in terms of GDP growth. But we are growing, but our markets are not following suit. And we wanted to look and listen to our stakeholders to see what we are doing wrong and what we are doing right, and how we can correct it going forward. So basically, that was the aim of the market of that gathering. So what we've done, we looked at the issues of liquidity, technology, education for the small and medium enterprises and big companies, and also one important aspect of the meeting was to look at our own institutional investors, our own domestic investors who are not participating enough in developing the markets. Yet we know that also in other developed world where you don't have enough retail investors, institutional investors normally drive markets, because those are the people with the deep pockets who are supposed to be supporting the businesses which are coming to the markets. So you find that in many of our countries we turn to the West to look for money with the multilateral organizations. We go to China to look for money to build our roads. Yet it's possible to build our roads with our own money as a region, because a region of 174 million people, that's a huge number, without counting Congo, which is planning to join. Apparently they are looking at that, Somalia and Ethiopia and all these people. So we have the numbers, we have the young population, and we have young and aspiring companies. So how do you address this going forward? What are we doing wrong so that we can advance our agenda? So we looked at that, and we came up with some measures to try to use technology, leverage on it, educate our people better and further than we were doing it. We basically, the theme was to bring the capital markets from boardrooms to Main Street. To see that we can make a difference to our people, in showcasing, of course, opportunities in East Africa for investments, but the relevance of capital market into that space. So, in a nutshell, that's what we were discussing. Sure.
Let's look at the Rwanda capital market and Rwanda Stock Exchange itself. It was established in 2011, and then over couple of years later, those are about 9 years. We are seeing over 19,000 people buying shares, and a few companies willing to list their shares on the market. What is the challenge? How can we overcome that and make sure that we have more people join the stock market?
Well, we have different challenges. The first one, I would say, that is the lack of awareness, enough awareness, I think. People don't have financial literacy. There's also a low level of savings. In the total country, in the whole country, we are not saving even at 20%. Yet we are supposed to be at 30% at least, so that we can, to GDP, for people to be able to save. Those are some of the things. But we also have a young market. We are still young, I can say. But, the companies also are not willing to necessarily come. The disclosures are a bit stringent sometimes, but they are necessary, because for you to access public funds, remember, when you come to the market, you are using public funds. It's not your money. So you have to come up with the three things: good governance, accountability, and profitability. All those people have good ideas. Those who have companies, family-owned businesses, they don't want to open their books sometimes, and they don't want to disclose or to share, in the profits with other people. They will prefer rather to go to the bank, which is more expensive for their business, rather than going for a bond, for example, or going for an equity stake in their company. So it's also, all those things, if you put them together, also the cost sometimes you mentioned, but it's a combination of all those. However, we know that there are things that we can do to help the businesses to access the long-term capital. First of all, it's cheaper to raise your capital through the markets, because you are getting it from the real owners of the funds. And then it's possible. The first thing was to put in place a legal framework and the environment, soft infrastructure, which we have done quite well. And then the second one was hard infrastructure, technology. It has also been done. So we are only remaining with a few things here and there, but we are also trying to leverage on technology and the resources available. And today's consumer for capital markets products is someone who's using also technology in some way. But also, today's consumer for capital markets products is the business person who wants money to grow their business. So, but there is one common denominator I was talking about. That governance structure and accountability matters that we have to put all together. So it's been a challenge. But we are seeing progress. Previously, we were only handling main bigger companies. Now we have also launched a market segment for small and medium enterprises, which we are bringing awareness about it. Actually, in the next few months and the next 2 months, I think in Q2, towards the end of Q2 or early Q3, we are going to be launching the last leg for even startups to hold their hands, so that they can also get to know this good culture of good corporate governance and being a good corporate business. So that one is called the Next Gen. We are going to be launching it, and we'll get to know about it. We are now make announcements around it, so that we are able to accompany companies and investors would come. There is no issue of money at all, because the money is available, but where are the products? Okay, where the savers are there, the money is there, but to match the two has been the challenge, to get credible, bankable projects to come to the market, and we are still struggling with that. But we are seeing some progress and interest in the market, even in Rwanda. So it requires, as we say, capital market is a long-term market, actually oriented. It means that also, you have to have patience when you are developing these markets, because you must do it right. You would rather have 2, 3, 4, 5 companies which are good, but rather than have one which will spoil the entire process. So you have to be careful, because this money, once it's lost, it doesn't come back. So, and that is a hard-earned savings of the population.
Sure. Of course, and one of the reasons why probably, people are taking long to adapt into this one would attribute it to the assurance in terms of security in the region. Do you think that has also played a role in one way or another on why people actually are not adopting this, to make, rather than investing in shares, they would rather buy a plot of land or cows or keep their money?
Actually, that has come out. I think it was even misunderstood that during this week there are so articles across the whole country.
Sure.
IGA.com and the New Times, and people who misunderstood what we were talking about.
Yeah.
So capital market instruments, it's an asset class. You can buy equity in a private company the same way you own your own restaurant, or you can buy equity in a public company like Bank of Kigali. So, or you can buy bonds to lend to government when they are issuing bonds, or some corporate companies which issue corporate bonds. So those are instruments that people can invest their money also into. So what we are saying here is that it's just an asset class. like any others. So people are used to having physical assets like a house, a cow, or land. These are good instruments to invest in, but they are not necessarily the only instruments you should be putting your money into. So if you really want to succeed in saving for your future, you should be a well-diversified individual. So all that, of course, requires knowledge. It requires, the level of sophistication. But sophistication should not come to you as an investor. It should really be coming to your professional who advises you. So people should try to approach us, to approach advisors who are doing that on a daily basis, the same way they approach a lawyer when they have a trial. The same way you approach a doctor. Even if you know how to treat your illness, it's better always to go to a doctor. So same goes to understand that this culture of Rwandese and to adopt the culture of using professionals to get proper advice. So it should be understood very well that we are talking about different asset classes. People invest in currency. Now we are talking even about cryptocurrency and all those things people are talking about nowadays. But shares and bonds, they are just asset classes like any other. They're the same way you buy land and the others. So I think, in a nutshell, we need to really look into more public education, taken to the streets so that people can understand how you save and for the longer term, we're using the small available resources we have instead of spending what we earn. We should save before we spend, but most of the time we spend before we save, so or invest in these instruments. So that's what it is.
Sure. Do you think the capital market can actually deliver East Africa from foreign aid dependency?
I'll give you a very simple example. East Africa today is comprised, including Sudan, South Sudan. I'm not talking about Congo and the other guys who are aspiring to come. So it's a community with 174 million people around there. 174 million people. If one person was able to save $100, okay, whatever incentive or whatever channel they use it to do, that's $14 billion. How many projects are we talking about? The railroad coming from Isaka to Rwanda, the Northern Corridor projects, how many of those are? This can serve as an equity, for example, just for argument's sake. So if you do such a thing, you are raising money like that, okay? Those projects, they can match the people. We have the people with a little bit of channels that they can use that money to go through. I think we can achieve that slowly. Of course, we cannot do that overnight, but if it is organized properly and the projects meet the real demand from the demand side of people who are saving, who want to save through that, with the right incentives and the right structures in place, it is more than possible.
But people are still poor in our region. They're poor. They don't have cash. They don't have all that money.
Well, people don't have really hard cash, but people have land. They have cows, like we were talking about earlier. And the cows are not necessarily all the time productive. You understand? You can have those cows which we have horns, but they're not giving you any milk.
So
just you have it for prestige. Maybe you have land, swaps of land. In Rwanda alone, there are people who have huge swaps of land they are not using. Today they are being taxed. You think that's economical? It's not. Rwanda today, it's not a mechanized farming we are doing. So there are all sorts of things people can make into real projects, and then you match it with the real funding from within the same people, actually. So it doesn't mean that people are poor to the tune they cannot afford 1,000 francs.
Pierre Celestin Rwabukumba, CEO of Rwanda Stock Exchange. Thank you so much for joining us.
Thank you.
I appreciate it. And that brings us to the end of our interview. Thank you so much.